All right, boys. Let's have a look here now at this 2019 cash flow statement. With this video, boys, I'm going to post with you, okay, a one-page note, okay, on the doing or the notes for the cash flow forecast, okay, which will help you along the way. All right. If we look at the 2019 cash flow, you will see there at the first start of it, lads. All right, you have a P&L extract for the year ending 31st to 12th 2018. What does it give you? Well, it gives you the operating profit, it gives the interest paid that you paid for the year, okay, it gives you your tax bill, it gives you your dividends paid, and your retained profit obviously, and then your P&L balance from the start of the year, and the P&L balance, then the new one at the end of the year. It then gives you a balance sheet, okay, for 2 years. It gives you the balance sheet for the year ending 2017 in the far right, and then it gives you the balance sheet ending this year in the near left, okay? So, looking down to it there quickly, you see there fixed assets, you've got land and buildings. Okay, and it's clear to see if you look at it from 2017 to 2018, land and buildings has gone up. It's gone up by 150,000. You can also see that your depreciation has gone up from 55 to 70, so it's an increase of 15,000. Okay. Then you've got your stock in current assets, it's gone up by 8,000, so it's an increase in stock. You've got a decrease in debtors by 11,000, and you've got an increase in your bank by 5,000. On to creditors, you've got a decrease in creditors of 7,000. You've got a decrease in your tax bill of 4,000. Okay, then you've got your debentures down in the finance buy. You've got an increase in debentures of 50,000. Okay, your ordinary share capital is increased by 18,000, I think. Yeah, and your share premium is also increased by 15,000. Okay, so that's the reason why they give you those two balance sheets, so you compare and contrast them like so. The first thing they want you to do then is to reconcile the operating profit to net cash inflow or outflow, okay, depending on your answer, okay, from the operating activities. Now, this is the same every year, okay? Now, the only thing you have to learn is a couple of rules that I have attached, okay, with this video, as you can see there, all right? So how do you do it? Well, here we go, okay? Now, I'm a little bit lazy, so I'm not going to write in the headings, that's okay. Oh, do you know what? I will. Okay, so reconciliation. Might as well do it right the first time. Okay, of operating profit. Okay, to net cash. Okay, and again, as I said, it'll either be inflow or outflow. Okay, so we'll leave that for a second. Okay, from operating activities. All right, so let's get cracking. Okay, the first thing you do, lads, is you take the operating profit figure, okay, from your P&L extract. So your operating profit figure. Okay, and your operating profit figure from your P&L extract is 135,000. All right. You know what, I'm just going to get the question out here because looking at them two screens is giving me a headache. Okay, here we go. All right, so your operating profit 135,000. Okay. As you can see there from your notes, lads, all right, the first thing you do is you will add your depreciation charge, okay, for the year, okay. So add your depreciation. Your depreciation, if you look back there to your balance sheet, lads, okay, increased from 55 to 70,000. So the depreciation charge for the year was obviously 15,000. Okay, so you add your depreciation charge. Okay, the next thing you look at then is stock, all right. If you refer to the notes that I gave you there, lads, you can see an increase in stock you take it away, a decrease in stock you add on. So if you go to stock there, there's an increase in stock, so we're going to take that away. Okay, so increase in stock, so we're going to take that away. And the increase in stock went from 70 to 78,000, so that's an increase of 8,000. All right. The next thing we're going to look at here, lads, is debtors. Okay, has there been an increase or decrease in debtors? It went from 40 down to 29, so there's been a decrease in debtors. If you refer to the notes, you must learn these off, lads. A decrease in debtors, okay, you add on. So we're going to add on the 11,000. Next thing we look at there, boys, then is creditors. Okay, we look back to the trial balance, the balance sheets. You can see the creditors there, that there's been a decrease in creditors. Okay, if there's a decrease in creditors, boys, you are going to take it away. That decrease is 7,000. All right. Now, you do the math. Okay, so 135 plus 15 is 150, and 11,161. Okay, minus 15 gives 146,000. Okay, that's a positive figure. All right, so I can say up here, that's the net cash inflow. And down here, I'll leave it in red. Okay, I can write net cash inflow from operating activities. Okay, now you're getting some amount of marks for that, lads. For this figure here, it's 3 marks, 6 marks, 6 marks, 6 marks, 6 marks, and 3 marks. So with that A question, lads, in total, you're going to get 30 marks for it. All right. Now, I'll move on to a new page here because I'm going to need the full page for this cash flow forecast. So B. Okay, for B, then they want you to do a cash flow statement. So again, I might as well just do that incorrectly. Good habits and all that. So cash flow statement. Okay, of McCabe Limited for year ending 31st of the 12th, 2018. Okay. Now, the beauty about this part, lads, is that they give you the 6 headings. Okay. And for you simply transferring them headings down, you're going to get marks. Okay. So the first heading there, lads, is operating activities. Okay. What you're doing, lads, is you are simply taking this here, this figure, and bringing it down. Okay. So we put down there net cash inflow from operating activities. Okay. And that was 146,000. All right. Just to point out, lads, for that heading, it's 3 marks. And for that correct figure, okay, it's 6 marks. All right, so 9 marks for that. Okay, your next heading then, again, take it straight out of the question, returns on investment and servicing of finance. And you must write these in full, lads, okay? So return on investment, okay, and servicing of finance. Okay, it's very rare, lads, that you will get a return on investment in an ordinary level question. Okay, usually what you get is the servicing of a finance. And servicing of finance, lads, comes down to your interest paid. Okay. So the interest paid, again, if you go back up to the top of the question, lads, you can say interest paid there was 19,000. Okay, that's money going out, so it's a negative 19,000. Again, what kind of marks are you getting for this? Well, for the heading, you're getting 2 marks, and for the figure, you're getting 8 marks. Okay, next heading. Again, take it straight out of the question, boys. The next heading there, heading 3 is taxation. Okay, be careful of this one now. Okay, and this is to do with money going out, lads. Okay, it's cash flow. Okay, so in this question here, if you go look refer back, okay, to your trial balance, I know at the top there it says that the taxation, okay, was 25,000. Yes. Okay, but that is your tax bill for the year. That doesn't mean you've paid it yet. Okay, what you have most definitely paid, if you go down to your balance sheets and look at taxation in the year 2017, okay, you see that 29,000 figure there, okay, that bill you would suspect has been paid, okay, because it was due at the end of 2017, you would have paid at some stage in 2018. So your taxation that you've actually paid, okay, so it's tax paid, okay, is 29,000. Again, that's money out. It's a negative figure. And we're trying to work out what our cash flow is. Okay, again, lads, headings there. That taxation heading gives you 2 marks. And that figure there, lads, gives you 6 marks. Alright, next heading. Again, straight out of the question. Capital expenditure and financial investment. So capital expenditure. Remember what capital expenditure means now. It's the purchase of a one-off asset. An asset that you wouldn't purchase on a daily basis. Only one that you would purchase once every now and again. Okay. And financial. Okay, investment. Now, in financial investment, lads, would be purchasing some sort of financial investment. Okay, rarely asked or given in these questions, lads. Usually what they give you. Okay, if you look back to your trial balance there, as I point out, fixed assets, land and buildings has increased by 150,000. Okay, so therefore you can say here, okay, purchase, okay, of land / buildings. Okay, again, that's money out. That's 150,000. Okay, what's the story with the marks? Well, the heading here, lads, gives you 2 marks. Okay, and the figure 150,000 gives you 6 marks. Alright, on to the next heading. The next heading here, lads, again, straight on, the question is equity dividends paid. And that just is to do with your dividends paid. Okay, so you come down here, you just simply scribble underneath the heading, dividends paid. Okay, if you go back up to your P&L extract at the start of the question there, you can see dividends paid, 26,000. Okay, again, that's money going out, so minus 26,000. Okay, at this point here now, lads, okay, we can draw a line underneath this here. To show you the marks again, that heading, lads, is 2 marks, okay, and that figure there is 8 marks. Now, all we got to do then is, it's 146 minus 19 minus 29 minus 150 minus 26. Okay, so obviously we're going to have a minus 78,000. Okay, that figure there then, boys, if it's a minus, okay, which it is in this case, you will say that's a net cash inflow. Okay, before liquid resources. Okay, and financing. Okay. Now, you do have to learn off that. Okay, then underneath that, then you're going to move on to your final heading. And your final heading, straight out of the question once again, boys, is financing. Okay, now, what goes underneath financing? Well, you've got your issue. Okay, of ordinary share capital. And if you look back at the question, let's come down to the very bottom into your finance by. Look at your ordinary share capital. It went from 452 in 2017 up to 470,000 in 2018, which is an increase of 18,000. And I'll do it in this little column here. If you look underneath that then, lads, it's not all the time, okay? But you've share premium. And share premium went from 0 up to 15,000 there, so I'll see 15,000. So there is your share capital, which is 33,000. Okay. Your debentures in this case, boys, okay, has gone up by, where is it? Yeah, 200 to 250, so it's gone up by 50,000. Okay. Now, if it was the other way, it's obviously going to be a negative figure, but you'll come across those as we do them. Okay. Adding those two together, lads, gives you 83,000. Okay, so you're left with 5,000. That's minus 78,000 plus 83,000, so you're left with 5,000. Because it's a positive figure, lads, you have an increase in cash. If it was a negative figure, you would have a decrease in cash. Okay, And again, marks, 6 marks for that, 6 marks for that, 6 marks for that, and 2 marks for that. All right, so that's B taken care of. Now, finally on to the last part, lads, which is C. Okay, which is a reconciliation. Okay, of net cash flow to movement in net debt. Okay, again, this is given to you in the question. Okay, now, you need to learn this off, lads, all right? So, what you do is you take the last line in your cash flow and make it your first line in your reconciliation statement here. So this is your increase in cash. Okay, and your increase in cash is 5,000. Okay, the next heading will always be, always be debentures. And again, this is in your notes, you need to turn them off. Okay, your debentures, okay, is obviously, because of an increase in debentures, all right, it's obviously debt that you owe back, so that's a negative 50,000. If it was a decrease in debentures, obviously that would be a positive figure. Okay, now, your change in net debt then, okay, is a negative 45,000. Okay, now, watch carefully. You have to your net debt at the start, is that right? Okay, at the start of the year, which is the first 2018. Now really, if you want, what's happening there is that's really the 31st of the 12th, 17, but you would never write that. You have to write the first 2018. How do you get your net debt? Okay, look at the notes that I gave you. Okay, you can see it down there in blue right at the bottom. Net debt is equal to your cash plus bank minus your bank overdraft and debentures. So if we look back at our current assets in the year 2017, gents, okay, you have no cash, but you have bank. Okay, so that's 10,000 minus, okay, there's no bank overdraft, so we will minus our debentures. So it's really 10,000 minus 200,000, that gives us a minus 190,000. Okay, those two together give you a minus 235,000. Okay, and that is your net debt at the 31st of the 12th, 2018. Now let's check if 235,000 is correct. We go to 2018 this time, and we have bank 15,000. Okay, minus our debenture of 250,000, which will give us 235,000. So that is correct. Okay. And the marks for this, lads, not a huge amount of marks for it. Marks all the same. Okay, you get 1 mark for each correct entry. Okay, boys, so that is 2019.